Hey guys, welcome back to the channel. We're looking at Bitcoin and the stock market crashing to their first bull market support levels. This is obviously for Bitcoin and the S&P 500. It has tested that level, broken through, closed below it on the weekly chart, and is now looking to attempt to retest it and hopefully close above it for the bulls. That's what I'm looking at in today's video, along with all of the crypto data. Make sure you hit the like button, subscribe to the channel. The free report is coming out in a few hours, so that would be a link in the top of the video description, name, email address, and you'll receive that very, very soon. Okay, let's kick it off with the crypto data here. Just looking at the daily exchange volume, it is on the way down again. So we've got a lower low and lower highs. If you've been following the channel, what we've been watching out for here is the possibility of a bit of a grind out for the strength of the market to return. At the moment, things are very, very weak. Obviously, there has been a plethora of fearish, bearish, fear, uncertainty, doubt news, of course, with Trump and the daily talks of tariffs and going on and off and actually coming on or then getting delayed. So there's a lot of that going on in the market. Now, before I get too carried away with the other narratives of the day, the liquidations are now sitting at nearly $1 billion for the last 24 hours. The longs keep getting absolutely annihilated day after day, this time $750 million in the last 24 hours, and the total liquidations was nearly $1 billion, therefore roughly 200 million going lost there for the shorts. The long-short ratio here is getting a little bit closer to even, about a 1% differential. As you can see, it's 49.5% to 50.5%. Generally, we like to see these things level out, as that's a bit of a sign that we might be seeing a bottom in the market, or at least some balance, some stability coming back to the game. On X, if you're not following, make sure you do that. I'm able to update you here a little bit quicker than, of course, on YouTube. I had a few things on today. Obviously, we're still getting over the cyclone and fixing things up around the house. Got a couple of posts out here looking at the extreme greed, which I will get to now. The extreme fear, obviously the fear and greed index, 24. So the interesting thing here is that we're seeing a higher low form for the sentiment. But in terms of price, and remember, price is king here. The price action hasn't confirmed that we're seeing a low in the market yet, right? But in terms of our timing, the time cycles, we're looking for something to happen in March. This is roughly, almost to the day actually, a 12-month anniversary of the $74,000 top for BTC last year. So it's interesting to note that we have the same extreme emotions, but on the flip side. Last year was extreme excitement for Bitcoin hitting a new all-time high. And this time, it's extreme fear for Bitcoin hitting a new fresh low. And as it shows up here on the chart, Monday's bar here dropped down to 77. And then just today, actually, we've got a new low in there at 76,555. And in my Thai viewers or anyone living in Thailand might like that 555. You know why? Leave it in the comments section if you know about the 555. Okay, crypto fear and greed index. Yep, we just had a look at that. This one here was for the Google Trends actually. So in the last 24 hours with Bitcoin dropping, testing that bull market support level again. This, at least for my analysis, this is a very, very important bull market support level, 79,200, because it is the here it is. This is the high projected and the low at August. So 49,000 up to 109,000. You split it through the middle, and Bitcoin has tested this now for a second time with a Monday close underneath that level. On the weekly sense, like we looked at yesterday, it was just above it. And we still have another 6 or so days to go, obviously, for this weekly close. So at the moment, it's doing everything possible to maintain that level. But longer term, if Bitcoin is unable to hold this level, the $79,000 level, well, then it just increases the chances of the price going lower to test the next levels. The next level sitting around 74,000 being the previous tops before the breakout. Then we come back to the US election bar, which many of the other asset classes have given back all of those gains from the US election of November. And for Bitcoin, that's somewhere around 69,000 up to 76. So if we are about to see a relief rally, what has to happen from here for the bull market to continue on in the excitable fashion? Basically, with everyone getting back on board, the first thing is at least, I've got here 88. I'm looking for this low in particular, the 13th of January, around $89,000. So that was a pretty important price point before Bitcoin bounced into that inauguration top. So essentially each of these tops has had something to do with Trump, but not in a good way. Basically a dump. That was the Melania and Trump coin, and then the inauguration here on the Monday. And then there were many other pieces of news that he's had here, you know, some sort of strategic reserve mention, and then there was a crypto summit and some other mention of the strategic reserve having Bitcoin, ETH, Solana, ADA, and XRP. Each of those times the market has sold it off, so we're getting a lot of news failures. So for this to turn around, price needs to get back above $89,000 and consolidate above that level so that it can test the next level. It's 92, 93, then the next top at around 95. So there's a lot of work for it to do in order for the trends to change on the short term and then into the long term. As you can see here, the weekly is down, the 1 day 2 bar is down, and the 1 day 1 bar. So just going from sort of medium term to the shorter term timeframes here. Everything is down at the moment. Got to pay attention to that as well. Obviously, it's showing weakness in the charts at the moment. So we've looked at the price ranges at the moment with Bitcoin testing the bull market support here. And we've looked at what needs to happen in order for the strength to come back, basically the buyers to step back in a meaningful fashion, regain the trend, and the bulls to take control. What if this breaks down? Where are the levels? We looked at that as well, 74,000, back towards 69 at these levels. So that was the low for the US election point. And then the entire bull market range, 109 all the way down to 15K, the 50% level through that is at 62,400. Ideally, the price doesn't go that far and stick around there to test it and see what happens, right? We've seen what happens when the market hits a 50% level. It needs to bounce away from that point. We can come back and have a look at what happened in 2024. See the September low to the March top, that nice 6-month range, came back down almost to the dollar. But when it tested it, buyers stepped back in, huge volume. The close was higher than the previous low, really, really important there. The market started to grind. On this September low, everyone thought the game was over. You know, it was stepping into another fresh low price. It didn't happen. Extreme fear, and then the market pushed high. Well, the price started to push higher at that point. So in this case, if we were to see Bitcoin fail over the coming week or two, this is in March is what I'm looking for, because remember, we've been looking for a low here in March, and I'll get to that with the S&P 500 as to why. You know, obviously, well, why is looking at cycles, but I'll show you the data points in just a sec. If this is to fail here, then we have to start looking lower. And that price point is somewhere around the $62,000 level, $62,400. So if it does test that, the worst thing you want to see, let's start with the worst first, is basically price to hang around there and close underneath that level. The best thing, if it were to test that, is a test and a very, very strong bounce back. You need to see some big volume coming back into the game and some closes above the previous swing lows. And the last one here is at about $67,000, $68,000. So if we do see that over the coming weeks, we fail here in March, continues lower into April and May, April or May, maybe both, and we get to that point at 62,000, it doesn't mean the bull market is over. This is the entire range here. Basically, once Bitcoin breaks the 50%, there is a very high chance that the bull market is over. So right now, it's on a knife's edge. So as I was saying here, to finish off, if it does test that level, we do need to see a big bounce back and some higher closes, preferably above or the high 60,000s or into the low 70s, of course, even better. And the best case scenario is closes back above the previous highs of $74,000. So we got an idea here of what's happening with BTC. Why is this happening? I think it has to do with, one, the sentiment resetting. We've looked at that in terms of the time frames. We still have quite a way to go, unfortunately. The current timeline at the moment is about 109 days from when the sentiment peaked. So 109 days. Generally, it's done around 4 to 5 months. So 4 months, about 120 days. That'll take you out to basically next Saturday. So if you can hang in there for a couple of weeks, this thing could keep grinding around here. We don't know yet. There hasn't been any confirmed signs that the low is in yet. Could all change by the time I upload this, right? And then taking this out to 5 months, as we looked at in the last couple of videos here, which has happened pretty much each of the corrections. 5 months takes us out to about April. So, that's why I'm looking here. If this particular low fails, we could be looking further out into Q2 of 2025. So, why is more of this happening? Well, we looked at this yesterday. This one here is the recession, so I won't go on about this too much longer. Trump has basically been a sell the news event this entire time. Now, there's plenty of economic announcements coming out over the next 1 to 2 weeks. CPI, PPIs, core retail sales. The Bank of Japan's got to make a policy rate announcement for their interest rates. Remember, this thing's gone up the last couple of times. The market's freaked out later. You've got federal funds rates, so the US is also talking about their interest rates. There's still no sign that they want to drop it, but of course we all know this can change at the drop of a dime, and it doesn't necessarily mean that it's going to happen. This was the whole case that I made in 2024. This was people were expecting cut after cut after cut, and it didn't happen for over 12 months. So basically, the market expectation was completely wrong when it came to the interest rates. Obviously, I talked about that on the channel, talked about that on X as well. So what could it be? In my opinion, it is the cycle at the moment, whether we're going to find a base here, and it's the S&P 500. Of course, that thing has also continued down in a pretty strong way. In terms of the March market performance over the last, 21 years. I'd love to use a bit longer here, but I'm just going to go with what Almanac Trader's got. Absolutely great data that he's been putting out for quite some time. Just looking at the lows, here we are at the 11th. So right there on the 10th, generally there's a low, a bit of a bounce, more pain to ensue into the 17th-ish. So that's next week of March. Of course, we have the seasonal date coming up next week as well, around the 20th, 21st. And from that point, the cycle looks like it starts to turn in the short term and in the longer term fashion here. So you've got March, April, May. Now, one thing to note, and this gets a little bit more advanced if you're willing to accept the advanced nature of it. If you're not, totally okay. You can just talk about being up, down, and sideways. The slightly more advanced nature of this is looking at the trend, not in terms of it must have a low here and must have a top here, but in terms of the market movement. Are we going to see some more action go up into these dates and then potentially down into these dates and then back up into roughly mid-April, back down into the end of April, back up later in April all the way into early May and back down? What I'm doing here is looking at it in terms of the market movement, not necessarily must be a low, must be a high here. Okay, so if you can get an idea of what the market wants to do at these times and looking at this in terms of a cycle playing out over and over again, then you can overlay this with your price charts and get a rough idea of which cycle we might be following, and are we going to see a turn at this point, or are we going to see continuation of the trend based on where the cycle is going? So the continuation of the cycle continues up here, sideways, and as you can see on the yellow here, incumbent party loses. You're not necessarily getting too much from the market, the S&P 500, in the post-election year until Q4. So the worrying thing here, I guess, for many people is that the market essentially dies and goes sideways. If this happens for the S&P 500, in my opinion, from my analysis, I would say that you're going to see much worse results for altcoins. That's got to be a given, right? Over all of them, risk asset. If the S&P 500 continues with this yellow line, or this, pink line trend here, that's going to be a very, very tough day for altcoins. Basically, everything in the crypto space. Bitcoin probably not going to fare as bad as the cryptos, but I think it's still going to have a pretty hard time for this entire period. So that's looking at March into a good period up into to May perhaps, and then another move down to July, move higher, move down into September, and then you finally start to see things going. That is going to be hell. You can bet it's going to be it's going to feel like hell. Like you can imagine what happened through 2023. That was this period here. Basically up into April, down into June, up into July, down into August, September, finally got the higher low in October, and then things started to run. It's essentially what we're seeing here. You can see up into April, down into June, in this case July also had a double bottom here, up again, but then obviously for Bitcoin it was August, September. Here you can see the low into September, and then things started to run. So I'm keeping that as an option as well, based on what we're seeing with the price action for BTC. If this is unable to hold this level, find some strength, find the buyers that are coming in, push the price back up into a position of strength, well, I can't sit here and just hope that it's going to be a booming bull market from that price point. Now, we've had many signals on the way down. One in particular was the 3-day, well, the 3 bars, 1, 2, 3, at the top here in December. That told us that things were slowing down. I talked about it on YouTube. I talked about it on X as well. The same thing happened back here for Bitcoin in March 2024. Now, I bring that up again because of what we're seeing on the S&P 500. It's not good news when it comes to booming markets. We had it at the top here, 1, 2, 3, from the all-time high. What also has now happened is, and this, I think it was confirmed overnight or on Monday. Yeah, so there's Monday. We now have 3 weeks down as well. So 1, 2, 3. Not red, but lower highs, lower lows. This one here is red, but it has a higher high and a higher low. So it's essentially an up week, even though it closed lower. You had high highs, high lows. So we have the signal now on a longer term time frame, and the overbalance in time and price has hit dead on right here. So if the S&P continues to drop from this point, maybe there's a relief rally here and it continues to find a lower price before it finds a new higher price from this level, to make sure I get the words right here, then we will see an overbalance, a confirmed overbalance in time and price for the S&P 500. Now, where this measure is coming from is the largest correction we've seen on the entire run up, coming out of the all-time high. The all-time high back there at 4,800 points. The August dump was the greatest in time and price for this entire move up. And right now, we have basically equaled it. Well, the S&P 500, I'm going to say we as the market, have equaled that time and price. And we've done it with a signal at the top on a 3-day, 3-day and a 3-week. What am I doing 4 for? On a 3-week as well. So that's not a great sign. But the silver lining is looking back at August. So this is where that August dump came in. We had 1, 2, 3. This one here, that's the third one. Even though it's green, you can see it there for yourself. Lower highs, lower lows. And it was able to reverse. So it had a big bounce out of that level. So basically, from this week or next, we need to see a solid bounce from these particular lows where we're getting extreme fear from. So here it is. Extreme fear, 14. We've seen even lower fear for the S&P 500. We've seen increased volume, some of the largest volume, as I pointed out yesterday on the daily, but even on the weekly here, it's the highest weekly volume since the banking crisis. So that puts things into perspective, at least from a point of view that you can see some buyers stepping in. Are they stepping in too early? That's another a question here. So if we are to see a rally at this point, a potential low, it needs to come back above relatively quickly. I'd say close above 5,900 points, which is the previous swing bottom here, 5,935. So you need a nice, big, strong bounce. Otherwise, so that's what we're going for here. And it can still correct again, but puts in a higher low and keeps going. Otherwise, it's likely going to be a lower top, like what happened back in 2023. And you continue to see the market head down. Because even in 2023, you had your 1, 2, 3 weeks down from a significant turning point. And that one there was significant because it came right up and tested the March top. And that was the lower swing top before the collapse. So a pretty strong point there. Happened again. put in this low, but from that low point, which took 3 months, mind you, the market started to grind higher. It ran away very quickly to a new all-time high and then took off from there. So what this is leaning towards is either one, well, what we want to see, well, the strength, need to see a good, strong weekly close above 59.35. If that doesn't happen, then I think we're probably more in the vicinity of something like this, which could last for roughly another 2 or so months. Now it puts us at something like this particular swing, except we may only see a relief rally into these highs, and then the downtrend continue on. So that downtrend could continue for the next couple of months, looking at that roughly 2 to 3 month period. Of course, none of that has happened yet. Up to you whether you want to prepare for something like that, being that we've tested the 50% level at the moment. It hasn't, we're still waiting on a weekly close here. You do have the 3 bars down. You have the 3 bars on the daily, 3 bars on the weekly. Remember last time we saw that, there was a big strong bounce that put an end to the downtrend here on the weekly. That was into that August low. But like we saw in the last couple of times that's happened, turn these back on, put it on the daily, the trend has essentially slowed down here. We saw 3 days down in November, we saw it again in October, and from that point, the trend has essentially slowed, and the price point is now below each of those, well, of the last 3 signals, and basically, yeah, below the 4th signal as well. We also saw it at the peak before the August dump, 1, 2, 3 days down. That price was around 5,600 points, and we're currently at 5630 odd points. It looks like we've got at least a relief rally coming. Does that develop into something bigger? That's obviously going to help with the Bitcoin bulls here, the strength coming back into the market. If not, and it's a relief rally into a lower high, then we need to watch out. I think the area to watch here is the S&P 500 for any clues on that, as it's broken down from the support level at 57. And like I said in the title here of the video, the bull market level here, this is our Gann 50% level. That's the major range, well, the medium term range that I'm watching. The largest range after this failure, or if this is to break down, we're looking at 5,100 points, and then the 4,800 point level. Now, I don't want to see the market get back to that area there from the high down to that low point. That's 20, nearly 22% correction, which is way too much for any sort of big gains to be had towards the end of the year. We can see last time we saw a 20+% correction was 2022. That was a 27% correction, and it took a couple of years before we saw a new all-time high. So I'm still watching each of these levels, 56, the lows here around 54, and then the Japanese yen carry trade fear being at around 5,100 points. Like, subscribe, and the free reports coming out today. You can also grab yourself $100 off TIA Premium once you subscribe to the free Crypto and Economic Report. The US dollar, we said that yesterday. This breakdown has confirmed overbalance in price, overbalance in time, break of swing, break of 50% level. I think this thing's got further to go down, but at the moment, it's just taking a bit of a breather here. What I've noticed is some of the narratives have shifted towards the US dollar being down, therefore the stock market is also down. Make of that what you will. Generally, you would see risk assets continue up with the US dollar going down, but there's all sorts of confusion at the moment in the markets, obviously tariffs and all sorts going on. Anyway, the long and the short of this particular chart is I still see this going down over the long term for the real estate cycle, which is in its final leg. We're in this winner's curse phase, and the peak is happening as we speak. The winner's curse leads into that peak, and then things start to get a little bit serious. I think it's still a bit too early to call this being the final top, and the market not going any higher from this point. Still too early. And in terms of timing, it still seems too early for this to happen. I think we do need a bit of a fear, a bit of a shakeout at this point, and for 2025 to be a little bit harder for the market to figure out what to do compared to 2024 and 2023 and the second half of 2022, where all of the gains, or the majority of the gains, had been had, right? It's not going to be easy all the time. The last couple of things I want to look at for crypto and for stocks is MicroStrategy. I can't see MicroStrategy hitting a new all-time high this cycle. That's just my opinion. You're welcome to have your own opinion and do whatever it is you want to do with your own money. But I've been talking about this now since December. So over 3 months, when these tops came in here with the lower highs for MicroStrategy at the higher highs for BTC, MicroStrategy looks like it is just bleeding out to death. Now, 69% correction is pretty typical. That's what it did last cycle. February top, April lower top, and then it dumped 69% before grinding, putting in a lower high again to February, roughly similar to April, and then the whole game was over by that point. So if we're tracking around something like that for BTC and this thing is going to take a little bit of time, well, it seems like it's lining up kind of similarly to 2017 when we were also going through similar cycles here back in the early part of 2017. January top, there's a March top here, but there's a couple of big fearful days there. Look at the 10th of March. Today is the 11th, but we saw a pretty decent day down yesterday on the 10th. So an exact 8-year repeat there. A bit of a failed attempt here. Lower prices on the 18th, lower prices on the 25th, a week after each other. In that case, 1 week here, 1 week here, 1 week here. And then things started to grind sideways and you didn't see a new it was an all-time high at the time. You didn't see a new all-time high until sort of late April, early May. So at the moment, the grind sideways, the uncertainty may be reminiscent of 2017, but not exactly when it comes to the price structure, because we have seen lower lows than what there was in January. So I guess that's a little bit of hopium to end out BTC. The last chart I want to show is the USDT dominance, which I guess isn't ending out on hopium at this stage. Well, look, the hopium is if this week closes below the diagonal here, that's at least a start to some sort of correction. It's got to get back under these previous resistance levels that it took 2 weeks to break above, and that's about 5.2%, something that I've been talking about for a very, very long time, and then ideally underneath the 4.8%. Now, this F-off massive bull mania never happened. It didn't break 3.7%. It got to that level, tested it multiple times, and then ran up. So basically a bull market on USDT. What does that mean? Well, it's a bear market on cryptocurrencies. Now, that was the bit of hopium there. Let me give you the, what's opposite to hopium? The FUD. Okay. The FUD is the level up here at around 6.6, 6.7%. Now, we've seen what happens at double tops, in terms of Ethereum as a particular one. We've seen it on Bitcoin. We've seen it on the stock market. You get these big double tops and they dump. Now we're looking at a big double bottom here for the USDT dominance. It has broken through the 50% level at 5.2%. The next level is right there at the 50% of the bear market range for the USDT dominance. That's at 5.6, 5.7%. So if it spikes to that level, you're going to see, again, big flush outs of ETH, big flush outs of Bitcoin, at least, the top cryptocurrencies there, which is going to feel like absolute shit. So we get to a top there. If that's able to hold, right? You've got some resistance or some support, potentially resistance. That's the next price target that I'm looking at for the USDT, which of course doesn't mean great things for Bitcoin and cryptocurrencies. You can see the price point up here. That would be very, very sickening, 8.2%. I don't know if that happens yet because we're looking at the previous cycle. This is the reference point that we were using this entire time from November, the last 3-4 months, looking at a very similar pattern, a breakaway to the resistance levels. Bitcoin puts in a low. It takes a couple of months. That's your May through to July. And then USDT dominance drops off, which means it's a bull market for Bitcoin and cryptos. And then it comes back down, finds another top here or another low for USDT dominance, top for Bitcoin. And then the whole cycle rinses and repeats. And bam, you get a huge flush out of crypto back into USDT. In terms of timing, it doesn't seem like we're there yet for this sort of big flush out. I'm just going to wait and see what the market tells me. If this keeps going this way, well, then you got to be in USDT because that's a USDT bull market and that's where you want to be, right? In terms of ETH, this is breaking down and that's obviously sharing more of its profits back to USDT. The target I've been watching now for quite some time is around $1,200. It's a bit of a crazy number there. I didn't believe it myself at first, right? $4,000 top, $4,000 top. This is the projections. It tested 50% straight away, bounced off it, broke through it, tested the 100, bounced, broke through it. So it seems like we're on our way to 16 and 12 $1,600 and $1,200 there for Ethereum. And this is a major, major double. If you want to call it maybe a triple top, but I'm just using the double top there. Same thing, you're getting the same result. It's a bearish signal for ETH. Now, it's hard to find any sort of hopium in this market at the moment, apart from timing coming up and the testing of these levels. There hasn't been any confirmation, unfortunately, for the bulls, for that strength to come back in. And if we continue to see the weakness here, well, then we've got to look down to the next support levels, 5,400. And this is going to affect Bitcoin and, of course, cryptocurrencies. In terms of altcoins, they continue to bleed out. They're going to need something pretty special and some sort of consolidation. Like, subscribe. I'll come back to you in the next video. Thanks for your patience with today's upload, and hopefully it's a little bit quicker for you tomorrow. See you then.